Hello there, this is the first part in explaining Japanese candlestick techniques for the binary option industry, and we will have 2 or 3 or maybe even more parts with practical examples of what the most important Japanese patterns are and how to trade binary options with them. Now, we will keep it simple, realistic, and with plenty of examples. Not the most important, but most of the Japanese candlestick techniques are reversal patterns. Namely, they come at the end of a trend. So either you have a bullish trend, like it is the case with the Euro-US dollar lately. This is the Euro-US dollar chart. So you have a bullish trend here, or you have a bearish trend and you look at the end of it for a reversal pattern. A reversal pattern with the Japanese techniques can be either a single candle or a group of candles. The most representative ones of them all, and every trader knows, it's called the hammer. A hammer candle looks like this. So let me go and take a short line here. So a hammer candle looks like this. You have a very long shadow, and then you have a body in the candlestick, something like this. Now the body of this candle can be either green, namely bullish, or red, namely bearish, but for the overall hammer this has no significance. But as you can see, the hammer, as you see it here, is a bullish reversal pattern. For a hammer you need to have a bearish trend before the hammer. So you need to have a bearish trend, then the hammer candle forms. Binary options traders will look to buy call options on a hammer, and then a reversal should come. Now, before moving forward, there's one thing that I would like to tell or to mention here. Any reversal pattern with the Japanese techniques is just that, a reversal pattern. It shows a battle between bears and bulls, or between bulls and bears. In other words, rarely after a reversal pattern like the hammer here, rarely you will have, right at the end of it, you will have the market effectively moving high like this. So the way to go is to wait for a pullback into the shadow. This is the shadow of the candle, into the shadow, like 50% or 61.8 before buying call options on a hammer like this. So a call option on the 50% retracement would be appropriate. Now there's another catch. Remember, because there is a battle between bears and bulls, because of this bearish trend that we have here, bears will not let it go that easy. They want to be in control. So a pullback here before anything is only normal. Another important thing is the time frame that you use when you trade binary options with Japanese candlestick techniques. Forget the lower time frames, 5 minutes, 10 minutes, 15, and an hourly chart. Those are for losers, pardon my word. Why? Because trading as it is today, human traders do not follow humans anymore. They follow robots. Algorithmic trading influences the way market moves today. Statistically, over 80% of orders are automated. Therefore, swings or previous swings being stopped and so on, these are the norm. So a binary option trader, what he needs to do is to find the proper time frame for its option in such a way that it has expiration dates for the option. So 4 hours time frame, maybe even the daily time frame, but bigger than daily is difficult unless you look at binary trading from an investment point of view and not from a end of week expiration or end of month expiration. Anyways, coming back to the hammer, this is the hammer, and for the hammer you need to have a bearish trend. But is this a similar, or does it exist a similar pattern when it comes to a bullish trend? Yes, it is. It is an inverted hammer, and it is called a shooting star, and the shooting star goes like this. You need to have a bullish trend, then the market forms a candle with a very long shadow, with a body that may have a red or green color, it doesn't matter, and then the market goes and moves the other way around. That's called a shooting star, and it is basically the inverse pattern of the hammer. Now let's look at some examples and see if we can find a shooting star or a hammer. And before moving forward, this being the Euro-US dollar 4-hour chart, we do have right here at this very moment on the 4 hours time frame here, we do have a shooting star or an inverse hammer. Remember the conditions here. What are the conditions? The conditions is that we need a bullish trend. Excellent. Let's go on checking the trend. So that's the bullish trend. Let's zoom in then. We need a candle at the top of that bullish trend with a very long shadow. This is the shadow of it. With a body that ideally fits 3 times into the shadow. It fits 3 times. And then at the end of that body, or by the moment that the candle ends, that's called a shooting star. Now remember what I said earlier with the hammer. It's very important to wait for a pullback before buying a put option in this case, because if you go and take a put option right here at the end of this candle, actually you do have 1, 2, 3, let's say 3 times 4, that's 12 hours for your option to expire in the money. But ideally what you need to do is the following. Go and take a Fibonacci retracement. Let's see where is that Fibonacci retracement. And then you effectively measure the length of the hammer candle. And then your area of interest to go and buy put option would be between 50% and 61.8. So you mark 50% and 61.8. We go like this. And that would be the area of interest to go and buy put options. Why? Remember, it's a dog-eat-dog world here. It's a bulls versus bears war. So waiting for a pullback, because the bulls, this is a very strong trend, a very strong bullish trend. To go against this trend, it is like trying to pick a top or a bottom if the trend was bearish, trying to pick a top in a very strong trend. That's very dangerous. So you need to wait for a pullback before anything. So the pullback came into 50 and 60. So this will be the first, let's say, place or the first possibility to go and trade a put option. But where? Where is the striking price? You don't have to wait for the close of the candle. Simply look at the levels. 1880 in this case, 1887. A nice place to go and buy a put option. And then the market tries again for the next 4 hours and tries again for the next 4 hours and again and again. What would be the absolute invalidation of this pattern or strategy? Of course, when market goes and takes the highs, effectively the shooting star here will disappear. Why? Because the bullish trend had the power to continue. Remember, these are reversal patterns at the end of a trend. When the market passes beyond 1910, in this case, the highest point of this shooting star, then there's no point into looking to trade put options anymore. But as long as that holds, ideally what you should do here is to split your investment. If you want to trade, or if your money management calls for a $50 binary option on this trend or on this trade or on such a trade, then you don't need to put it all into one trade. What you need to do is to split it into 2 various places. So ideally you will trade a 50% retracement with one option, half of the amount, and a 61.8 retracement with the other option, half of the amount. And just like that, you are in binary options trading. This is what a hammer is. Let's zoom out now This is what a hammer is, and an inverted hammer, if you want, or a shooting star. And if you go back, just go on the 4-hour chart of any currency pair and go back in time and look for situations where a hammer or an inverse hammer or a shooting star form. You will see that they are not that often. But because of what they show, traders have a tremendous advantage ahead of the market. Look at it here. This is a very short, if you go on the hourly chart, it's a very short bullish trend. On top of it, we have a shooting star. Wait for the retracement into the 50% 61.8 before buying put options in this case. Now the same is valid with a hammer when the market comes from after a bearish trend. Now this has much to do with money management, because not all the patterns survive. As a rule of thumb, the bigger the time frame is, the bigger chances the hammer will have to survive. Our second part will deal with another important reversal pattern, morning and evening stars, which is a 3-candle pattern that forms more often than people think. Thank you for being here and have a great day. Bye bye.